ladies and gentlemen, we're back at it again. And this time I'm here with Lisa Miller to finish the last installment of our insurance talk. And like I always promise you, I have nothing but great tips for y'all. So when you're at home or in the process of buying a home, you have everything covered. Everything you need to know, okay? If you haven't followed us, please follow me on Instagram at The Related or at N1Louie, okay? Also too, if you have not seen our previous videos, definitely check it out. It's on Facebook. You can also find it on Instagram. It is great. It has lots of advice and tons of tips, okay? But today is the last installment, and I want you all to meet once again Miss Lisa Miller.
Thank you for having me.
All right, so today we have our last installment, and let me go through the questions. But this will be a Q&A with me and her. The process and the goal is that you will learn from it. So if you after this, if you have any questions, just type it in the comment section, and I'll definitely follow up with you.
Sounds good.
All right, so let's start with our first question. So Lisa, how much liability protection do people normally need when they think about buying a home, and that's their first investment? This is maybe a first time home, and they want to make sure they are fully covered, or just want to get liability. But then the question is, how much liability protection do the person need?
Okay, so every insurance policy has coverage A through F. The liability portion of that is coverage E, and the policies that we write, the maximum I can put on there is $500,000. So in the event that someone comes onto your property and gets hurt and wants to sue you, then you have $500,000 of liability there for that.
Oh, okay.
Okay. There are other options. You can also take out a personal umbrella policy on top of your homeowner's policy. So let's say someone's seriously injured and they want to sue you for $1 million. You only have $500,000 in your homeowner's policy, right?
Yeah.
So where's that other $500,000 going to come from? Well, if you have a personal umbrella policy, then the other $500,000 can be pulled from that umbrella policy, so that there's no liens or anything put against your home. Does that make sense?
That makes sense. So then, what is a personal umbrella policy?
So a personal umbrella policy, they're done in increments of $1 million. And what they do is they kind of come up between your home and the auto, kind of like an umbrella does, and opens up. Okay. So the excess liability can be pulled either from your homeowner's policy if you don't have enough coverage in there, or let's say you have a car accident and you do have to carry higher limits on your auto insurance in order to support the umbrella policy. So $250,000 per person, $500,000 per accident. So let's say you were in an auto accident and there's 4 people in the other car and their medical bills came up to over $1 million. Well, you only have $500,000 in that auto policy, right? Mm-hmm. So where are they going to get that other $500,000? Well, to keep someone from being able to put a lien on your home because you still owe them $500,000, you would be able to pull that from that umbrella policy. Oh. So if someone has a swimming pool, a $500,000 house or more, it's just a little bit extra protection. And I've seen $1 million umbrella policy cost as low as $200, $250 a year to have that.
Oh, wow.
So it's just to have that extra excess liability in the event that you may need that.
Wow, that is crazy.
But it protects your home, which is your biggest asset. It protects that from someone being able to come in and put a lien against your home or garnish your wages to get the rest of their money.
So that's like less than $20 a month.
Yeah. And now I'm not saying they're all $200, but the average runs anywhere from $200 to about $400, depending on what all types of risk you have in there. They take into consideration whether or not you have motorcycles, boats, RVs, other things, or multiple properties.
Okay.
So especially someone who does have multiple properties, you're an investor, you have a couple of rental homes, it's always a great idea to have that umbrella policy.
Okay.
Just so that you have that excess liability that you can pull money from if need be.
Oh, wow. Okay. So we started by talking about how much liability coverage do I need, but now it's like, ooh, there's another benefit. You can actually get an extra umbrella policy, and with that little payment every month, you have a bigger protection.
Oh, absolutely.
Wow.
Because we want to protect that asset. Your home, like I said, is your biggest asset that you're going to have in your life, more than likely. So we want to protect that in every way that we can.
Wow, that's fantastic. I'm glad we're having this talk.
Yay. See, I think you're even learning something, right?
I know, right? All right, so the next question is, what's the dwelling coverage per square footage? And what does that mean?
So when we run a quote for a client, we put the characteristics of the house into the system, and it's going to kick back to us the estimated cost to rebuild that home.
Okay.
So some of the things that are going to make a difference in that estimated cost is how many bathrooms do you have? Are they builder's grade bathrooms, or are they semi-custom and they got marble in them? Same thing with your kitchen. Is it just a regular builder's grade kitchen, or does it have granite countertops? And you know, the other things that go into a nicer kitchen than just something that you would see from a tract home.
Yeah.
So when we put that into the system, then the system will kick back to us and they'll say, okay, it's going to cost this much money. This is the estimated cost to rebuild that home. So your dwelling coverage A is going to be based off of what the system tells us we need to cover the home for. And I will tell you guys, you know, since COVID, we all know that lumber supplies have gone up, right?
Right, yeah.
So since COVID, it's costing more, even in our system, it's basing that on today's rates, what it would cost. So if you get a quote today compared to something that you got maybe 5 years ago, it's going to cost more today to rebuild that home than it did 5 years ago. So you always want to check, even if you already have homeowners insurance, you need to call your agent and make sure that you have enough coverage in there in the event that something was to happen to your home, that it was a complete total loss, that you have enough coverage in your insurance policy to be able to rebuild that home. So, and I'll give you a great example. So the way that I structure policies, the majority of my carriers that I write with, they will allow me to do 20 to 50% over the estimated cost to rebuild the home. The nice thing about doing that is you have that extra little cushion in there, but your deductible is only going to be based off of that coverage A estimated cost.
Okay.
So for example, let's say I put everything into the system and the system comes back and tells me I need to cover your house for $500,000, right? So your 1% deductible would be $5,000, right? But I can go in and put an additional 50% replacement cost on top of that $500,000. So now the most this policy would pay out is up to $750,000.
Okay.
But the cool part is you're still only paying $5,000 for your deductible. So your deductible is based off of that 1%, not the additional replacement cost.
Oh, wow. So that additional replacement cost is added to your full benefit without you paying more for it?
So when I have done it in the system, it's like $20. If I did 125% replacement cost, then it's going to add about $20 to your policy. If I do 50%, then add another 20 on top of that. So like about $40 a year difference.
Oh, wow.
But so insurance policies, the insurance carriers, they look at what that dwelling coverage is. They know that that's the most they have to pay out. So even if your home was a total loss and you didn't have that additional replacement cost in your policy, then whatever's on that coverage A, that's all they have to pay out.
Okay.
So if pricing for lumber, like it has been, has skyrocketed, you may not have enough coverage to rebuild your home back to what it was prior to that loss.
I see.
So it's, you know, it's not really an inflation guard. I kind of call it that sometimes because that's what it kind of reminds me of. It just gives you that little bit of extra cushion to know that you're going to be able to rebuild that home back to what it was.
Right. And also too, like you're saying, if you've added any improvements to the house or maybe any enhancements, if you replace the manufacturer's ordinary or track bathrooms or kitchens
And have
with high-end,
upgraded those.
granite countertops, high-end appliances.
Check your insurance. Check with your insurance agent and have them check that for you, because you may not have enough coverage in your policy to
cover
replace
those.
it, even
Wow.
with those additions that you added to it.
Wow. Okay. So y'all just heard it, Just have some insights, some great tips. I know y'all love your homes, and at one point you might want to improve your home or renovate it or rehab it. But the question is, all these costs that you put into the house, is it featured in the replacement cost? If not, think about it. If not, call your agent, okay? Isn't that correct?
That is correct.
All right, let's move on. So what level of additional living expense coverage does a person need? Is it possible to have multiple deductibles?
Okay, so let's talk about additional living coverage first. So what that is, some policies call it loss of use. It's in the event that something happens that you're not able to live in your home. And this is coverage D on an insurance policy. So you have a set amount in your insurance policy for loss of use. That means I can't live in my home, so I have to go live elsewhere, whether it be a motel. Let's say I had a fire at my house and I have to go live, I have to go rent an apartment because it's going to take months to get my house rebuilt back to what it was. Well, there is an amount in your insurance policy that it's a reimbursement amount. Let's be clear, because they're not just going to write you a check for whatever that amount is. So let's say you have $90,000 of additional living expenses. Then those additional living expenses is due to you not being able to be in your home. So it counts your lodging, your meals, your dry cleaning. If you have pets, maybe where you're going to stay until they get your house repaired doesn't take pets and you have to put your pet in a pet resort, it'll even cover that. So you pay out front and then you send in the receipts to the insurance company and they will pay you back up to that amount that's on your policy. And then, is it possible to have multiple deductibles? So in the state of Texas, wind and hail is always going to be 1% of whatever your coverage A dwelling is. But you can go in and you can have $1,000 deductible on all other perils. So fire, lightning, water damage. So you can have different deductibles within that homeowner's policy. Does that make sense? Mm-hmm. So let's take that $500,000 policy that we were talking about earlier. So with that, you could actually say 1% on all perils except wind and hail, and then you have the 1%. So if I'm taking $1,000 deductible and I have a fire in my house, I don't have to pay $5,000 to file an insurance claim. I only have to pay $1,000.
Okay, so let's take a step back. The replacement cost and that 1% is different from the fire and other perils, correct?
So you have all perils deductible, and then you have wind and hail deductible. Okay. So 90% of the time I put 1% across the board. Okay. But if someone was wanting to have a lower deductible on other perils other than wind and hail, so for fire, water, lightning, things like that, then they could actually take $1,000 deductible instead of that 1%, which is $5,000 in this situation. Okay. Does that make sense?
Kind of.
Okay.
So you're saying that instead of having a flat 1% deductible on everything,
correct,
you can go in or talk to your agent to say, okay, I want $1,000 each on every other thing.
I want that 1% on my wind and hail, and I want $1,000 on everything else.
Okay. So you can choose,
right,
and sort it out. Okay, that's good. Wow. So let's be clear. That living expense coverage, it pays for you when you cannot live in your house because of an incident, right? And correct, you have to go stay in a hotel, correct, or live somewhere else. But it's not a free check.
It is not a free check.
It's a reimbursable check.
It is.
So you have to pay first and then get paid on the back end.
That is correct. Because otherwise, insurance companies, let's say you have $90,000 of additional living expenses, they're not just going to write you a check for $90,000 because it may not add up to $90,000. Maybe you're only out of your house for a week or a couple of days. They're not just going to write you a check for $90,000.
Correct.
You're going to pay for whatever it cost you to live elsewhere, and then submit those receipts to the insurance company, and they will reimburse you back up to whatever the limit is in your policy.
So how does one gauge what is reasonable living expense coverage?
Well, what I normally do is I would say, okay, so let's say your house had a fire, and it's going to take 6 months to rebuild your home.
Okay.
So what I would gauge is, what would it cost me for the next 6 months to live elsewhere?
Okay.
So 6 months, you're probably not going to stay in a hotel. You're probably going to lease a 6-month apartment or something
house,
like that, or a house. And then you look at, what's that going to cost me to rent that, to lease that?
Okay.
So let's say it's $2,000 a month.
Yeah.
Okay. So then I'm going to be out of my house for 6 months. So I need at least, what? $12,000 worth of additional living expense. That's just for the roof over my head. That's not my meals. That's not my dry cleaning. That's not the other expenses that I incur due to the fact that I'm not in my home.
Oh, wow. So it covers all of that?
It covers all of that.
Including your meals?
Your meals. I tell people, go eat really nice meals. Enjoy yourself. Don't stress.
So can I go to a steakhouse every night?
You can go to a steakhouse every night.
Oh my
now,
gosh.
again, remember, there's limits on the policy.
Okay.
So, just kind of keep that in mind. That there is a limit to how much they're going to reimburse you.
And if I call and say, Lisa, what is my limit, so I know how much to go out and ball, you let me know, right?
I would. I can let you know. Even if I didn't write your policy, you can send me a copy of your declaration page, and I'll be more than happy to kind of go through the coverages with you so that you know exactly what it is that you have in that policy.
See, this is some great tip. This is a fantastic tip. This is a mad tip, okay? That even if Lisa didn't write your coverage for you, call her. Send over your declaration pages, okay? And she'll interpret it for you and tell you what exactly you need to know. Because sometimes you need to know these things.
Oh, absolutely.
And this paperwork is so huge, it's redundant. You're like, oh gosh, I need a vacation to read this thing,
and nobody likes to deal with insurance, but it's one of those necessary evils that we all need to have that. And insurance is there for you guys when, in the event of a catastrophe or something goes wrong. That's what your insurance is for.
Right.
I can also help direct you. I get a lot of phone calls just because we have a hailstorm come through. You would not believe how many people pick up the phone. They don't call their agent. They call that claims hotline, and they want to file a claim against their home.
Yeah.
Well, maybe their home didn't get hit by hail.
Right.
Or there's not enough damage to file a claim on it, but now you have a claim on your record, and it paid out nothing. Maybe it's a little $600 patch job that needs to be done. So your deductible's $5,000 on the example that we gave. $600 out of your pocket that you didn't even meet your deductible, so the insurance company's paying nothing. But now that claim is on your history.
Just because you called.
Just because you called.
Did you hear that? Don't call that hotline, okay? Call your agent.
That's right. So what I normally will tell people, let's say it is a hailstorm, because we get so many of those here in North Texas, or I had a gentleman a couple of weeks ago, he called me and he goes, Lisa, we had this hailstorm and I've got these roofers knocking on my door every other day saying, oh, we're replacing your neighbor's roof. Let us go up and look at your roof for you. Don't do that. Don't let them look at your roof. Call a reputable roofing company that's not a door knocker or fly-by-night or storm chaser. Call a reputable roofing company. Get them out. Let them assess the damage. The other nice benefit of that is they're going to be able to, let's say there is a hole in your roof and it's leaking water into your home. They're going to be able to chart that off so that no further damage occurs. And then they're going to say, yeah, you need to file a claim with your insurance. This is going to be more than $5,000 to fix this problem. So then at that time, then call the insurance company and file that claim. But you know now, because a reputable roofing company has told you this is how much it's going to cost to repair your roof. So that's when you can call the insurance company. But like I said, a lot of people, they get a hailstorm, they see other people getting roofs. Oh, I bet I need a new roof. Let me call my insurance company.
Wow.
Not a good idea.
Actually, it's a bad idea.
It is a
terrible
bad idea.
Because that claim will be on your insurance file forever.
Mm-hmm. Well, 7 years.
7 years.
Yeah.
See? 7 years that you have to pay for.
So guess what happens next year when your insurance comes up for renewal?
Yeah, you have to pay for that phone call.
You have a claim on your file. So now they're going to raise your premiums. So I try to help people keep their insurance premiums as low as possible.
Wow.
And that's preventing unnecessary claims filed on your insurance. And I will tell you, a lot of the carriers, when they see these multiple claims on your record and yet none of them paid out anything, they may not even take you as a client.
You become a bigger risk.
You become a risk to them because they think, oh, these people are just trying to get money out of the insurance companies,
Right.
so we don't want them.
Right.
So be careful when it comes to filing claims. By all means, that's what your insurance is there to do for you, but make sure that that's worth it to you to file that claim.
See? That's why you need to be watching this. That's why you need to be talking to me or talking to Lisa, okay? See, I make sure I provide you with mad advice, mad tips that you will not find anywhere else. Did you know that anytime you filed a claim that did not pay out, or you thought you needed to file a claim, or you felt like filing a claim and just called a hotline, that was going to go against you for 7 years and you were going to pay for it in premiums. See?
This is true.
Let's go on. I don't even want to say no more. All right. Listen, fourth question. How can a buyer qualify for any discounts? Because,
So,
nobody wants insurance. It's a necessary evil. But at the same time, I want to pay
as little as possible.
the most optimum. I don't want to overpay. Yeah.
The best way to save money is to bundle, and that's putting your home and auto with the same carrier. So they're going to give you a discount for that because they have all your assets now. So they're going to give you a discount. That personal umbrella policy will also, if you take out an umbrella policy with your home and your auto, then you're also going to get a discount because you have that excess liability. So they know that you're really wanting to protect what you have.
Oh, okay.
So they're going to reward you for that by giving you those discounts. RVs and motorcycles. So let's take someone like me. I don't own a home right now. So I pay rent. I can take out renter's insurance to get a discount on my auto insurance.
Okay.
So anytime you can bundle 2 or more policies with the same carrier, they're going to reward you for that and give you that discount for that.
Nice one. I like that. That sometimes can be obvious, right? That you can save more by bundling more. But then are there other ways of saving? Which brings me to my last question. Are there more other ways of saving on my insurance?
So the way that insurance works, as far as what you pay for it, the higher the deductible you're willing to take, the lower the premium.
Okay.
So let's say that again. The higher the deductible, the lower the premium.
Okay.
The lower the deductible, the higher the premium, right?
Okay.
So it kind of, which way do you want to go here? Now, be careful taking those higher deductibles because know that if you have a claim, that's how much money you have to be out of pocket before the insurance company is going to pay a penny for your claim. So make sure that you are financially able to take that higher deductible to get that lower premium.
Okay.
I mean, I would rather pay a couple of, maybe $50 a month more for my insurance and have that lower deductible than take a high deductible that I'm not going to be able to come up with in the event of a claim.
Okay.
Just to get a lower monthly payment on my insurance.
Gotcha. That sounds fantastic. I like that.
Well, good.
Thank you so much, Lisa.
Absolutely. It's my
taking the
pleasure.
time. And as always, you know, give me a call, give Lisa a call. Where can we reach you at, Lisa?
So I give my cell phone to everyone. It's 817-939-3386, or you can email me at Lisa, Lisa, M as in Mary, at hometeaminsurance.com.
Thank you very much. And we'll talk to you soon.
Thank you.
All right.